Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at Bitcoin, and we're going to start with our Elliott wave analysis first and then wrap things up with some basic technical analysis at the end of the video. We have one count as a zigzag into a wave 4, which we're going to look at two interpretations of, and we're also going to reintroduce an old count which was a flat pattern I abandoned a few weeks ago, but I rejigged it and it's a pretty nice fit, so we'll look at that before we leave. But first things first, very busy chart, I know, but don't worry about that. We'll be zooming into the more recent price action soon. I just wanted to retouch on where I think we are on the long-term time frame. And I've mentioned this before, but it's always a good idea to bring people up to speed. So I'm saying that we have done a primary wave 1 back in June 2019, bottoming in the March of 2020. We've come up into a primary wave 3. We are now moving down into a primary wave 4, yet to bottom. We don't know how deep this is going to be, but we'll come in and look at the targets for each of the counts in a little while. The cutoff for this, the invalidation point, is all the way back at the primary wave 1 high, which is at 13,929. So a long way down to still keep this bullish market intact. So the bull is by no means dead. If we look at the pitchfork as well that frames this market using our swing high primary 1, primary 2 pivot, we can see that we came back to the trend line within the pitchfork. So this median line here in the middle, we're currently hanging around it. We're just breaking through it at the moment, having broken out of a triangle pattern, which looks like we're going to head lower. So that's the large time frame view of things. So let's just hide this pitchfork for the moment, and now we're going to zoom in on all this more recent stuff. So the pattern we're looking at here is the idea that we topped in an ending diagonal into a primary wave 3, 1, 2, 3, 4, 5 series of three-way structures into a fifth intermediate, into a third primary, and we've then since putting in a zigzag, an A, B, C, with an extension in the C, taking it beyond the usual 1-to-1 parity, and we could potentially go further. We have already come to the 1618 C equals A here at 3893.19, but we could head lower. So looking at potential lower targets, we have a 38.2% retracement in log scale. So essentially the retracement of the primary wave 3 of the from the primary wave 2 low. That's a log scale target at 22.06169. It's quite a long way down. We also have the all-time high here at 20.045.19, and the maximum extension of the C in price terms, if we come off the log scale for a moment, is hang on, bear with me, turn the auto off, is all the way down here, this array at 12.947. so this would invalidate the count. So this is essentially the invalidation point down here. So this C we would not expect to see go to its full extension, as that would take us into primary 1 territory. So what we'll write here, so we'll just bring this up into white, and we'll say invalidation wave 4 primary. Okay, so we know that we can't go across this red line and still think of this as an ABC correction, as a zigzag from a wave 3 into a wave 4, because we would have invalidated wave 1's territory with the primary wave 4. So we've still got a lot between us and there, though. You know, if we just take a quick measure of where we're currently trading and we come down to that invalidation point, we've got another 58% drop potentially before invalidating the count. So we're still well within the bullish count. So where are we likely to stop? Well, let's have a quick look and see if there's anything we can point to. It's interesting. We've already got these targets. 22.061 is 38.2. 20,045 is the all-time high. And now we've got a 1, 2, 3, 4, 5, and we think we're in the fifth minor wave of the C. So let's come down to the hourly time frame for the moment, try and get a bit more perspective on the chart. Okay, So here's the extension in that 3, here's the A, B, C, D, E in the 4th, completing, and here's an impulse wave on our way out of the bottom of the triangle, heading towards new lows. Haven't made new lows yet, but we're heading in that direction. So let's see if there's anything we can point to here. Okay, so we got a very extended 3, bit of a meltdown here, bringing us to maximum target of 4236. Now you could reposition this, but I'm going to stick with this for the moment because we've got an interpretation that allows us to view this move as a 1 and this move as a 2, which brings this triangle pattern 3-4 into much greater symmetry. And I think I'm actually preferring that flat count now, so we'll go over and have a look at that in a minute. But let's just press on for a moment. So let's take the full length of our 1 and our 3, assuming that's correct, and place it on a 4. And this gives us a price target in this area between the 38.2 and the all-time high. We get a 61.8 extension of 1 and 3 from 4, which is a golden ratio, and it's basically smack in between these support zones. So let's just put a yellow line there so that we know it's a 61.8 golden ratio, and we'll pop a price tag on that as well. Just drag this out to here. We'll reposition it in a minute. I just put it in the wrong place. So let's just have another quick measure. I shouldn't have moved that before I was finished with it. Okay, so I'm down to the 3 here. Come on, get your act together, Tom. Down to the bottom of the 3 here, to the 4. Okay, it's just ever so slightly lower. There. And we'll lock this in place, and we'll pop a price tag on it. Pop a price tag on it, pop it on the shelf. Do you want to buy it? Do you want to buy it here at 21,248? So 38.2 retracement, all-time high here, and also 61.8% extension of 1 and 3 from 4. So we've got a whole bunch of support down here, which looks pretty nice as a 5th wave move down, to be honest. 61.8%, 1 and 3 from minor 4. And our golden ratio here on this one, I'll put that in yellow so we recognise it corresponding. Okay, so here's those targets essentially. You've got your 61.8% of 1 and 3 from 4 to find minor 5 at 21,248 spot 74. Then you got your 38.2 log. So essentially, let's just put a big box around all of this. Where did we get one of those? It's in drawings, isn't it? Yes, rectangle. Haven't got my favourites bar up, that's what it is. What do we want to call this then? I've deleted the 38.2, what a plonker. I'll put that back up in a sec. So all inside of this area here, let's just switch back into log, alter the chart for a moment. We're going to have to come down to the 4 hour to find this bottom. Okay. So this whole move up, we're looking for, let's get our favourites bar up, we're looking for a retracement. Let's just use a magnet to make sure we're absolutely precise. It's not going to let us get it, is it? Zoom in. There it is. Switch it off, zoom out, zoom up to the top, switch it on. Straight to the very peak. I'm going to have to zoom in a bit more. Oop. No, my mistake, zoom out a bit. Oh, it's because I left the magnet on, isn't it? Bear with me, I'm having one of those mornings this morning. I'm just not getting my act together. Here we are. Right to the very peak. There we go, don't worry, I won't bite you. Right then, so let's see where that puts that 38.2. Here we are, this big green line here. So yeah, it's all in this, it's all down here in this territory here. This is our 38.2% retracement. This is a perfectly normal retracement for a wave 4. Let's turn this into green. Again, lock it in place. Brilliant. So now we can get rid of the Fibonacci. So yeah, you've got a whole bunch of targets down here. 38 to 61.8 of 1 and 3 from 4, and the all-time high, all sat around here, somewhere between 20,000 and 22. Let's just shrink this box down then. We can expect to find the C in this pattern, in this interpretation. We can expect to find the C somewhere in here. Okay, we can't really project forward here yet because we haven't got a clear 1, 2, 3, 4 waves down. Once we have, we can then take 1 and 3 to find 5, or we can take 1 projected from 4 if it wants to force in to find 5. But at the moment, it's very early days, so obsessing over the short-term count here is just a waste of time. Focus on the long-term targets and wait and observe the price breaking down, and try and stay focused on that until you've got something that you can clearly count. The only thing you should do in the meantime, if you are going to count this, is you should just assume a normal extension in the 3. So you should probably focus on going 1, 2, 1, 2, 1, 2, until we get a significant move down to suggest that we're into the 3 of the 3. Is how I would go about doing it, but I'm not in a rush to do it because I want to see the low taken out first before I bother even trying to count this. So, right then, that's the one interpretation done. So let's move over and introduce this the other way of looking at this, which is very different. This is the same zigzag, but we're saying the zigzag's complete, and we're going to turn around and not make a new low. Now, this is unlikely, because it's likely this is a triangle. Everyone and their mate is saying it's a triangle, right? Everyone and their cat is saying that this is a triangle. And they might well be right, but let's just assume for a minute that everyone's wrong, and it's not a triangle. Now, you have to bear with me, my chart is frozen for a moment. It does this sometimes when I flip in between them too quickly. I think it's the web browser just doesn't like me doing it. Either that or it's TradingView, I'm not sure. Can I click on it yet? No, it's properly frozen again. There we go, come back to life. Cautiously click on it again. So this one is the same zigzag, the 3 up here, except we're saying that the C finished, the zigzag completed, where we'd expect it to, at the 1.618, which is an extension in the C, again, just not as severe. So we've gone A, B, C, and we've had our 5 waves down, and we've already bottomed here. Now, the way we got 5 waves into here is a little sneaky. I've had to rely on the truncation to justify it. But I'm happy to do that under the circumstances in which it occurred. And what do I mean by that? Well, let's count them down. 1, 2, and then we go 3, 4 in a 3 wave move here, and then we get a 5. 1, 2, 3, 4, 5 wave down, suggesting that this could be the 5th into a minor 5, right? Completing the C, completing the 4. And we've had a truncation, we did not come down below the 3. The reason I'm willing to accept this is these liquidation spikes you get inside of the crypto market. There's one here for the 1, there's one here for the 3. This is minute, this is minor. They do occur where shit just gets completely out of control. People get wrecked. Normally margin accounts get wrecked, and they just wick through levels but never close at them. Now, we always respect the wicks, hence why we're not calling this a 5 without a truncation. We're calling it a truncated 5 because we did not finish below this wick. But we came back up in the 4, and then there was an underlying bid which stopped us from going any lower than the liquidation point here in the 3, where I think things just accelerated. So this is a bullish interpretation that says we're not going to set a new low. So we've gone 3, 4, 5 above the 1618, completing the C, completing the 4. We've then come up in 1, 2, 3, 4, 5 waves into a minute 1. A, B, is this sub-minute? I should have changed this to minute. I had to go even lower than I normally would there. So this, it had to go to micro. This is sub-minute. And this is minute. And that's right. Okay, so the labelling is getting a little tricky because we're getting such a small wave degree here, but you get the idea. We've gone into a 1, we've gone A, B, C into a W, 3 wave move here, and then we've gone A, B, C into an A here, 3 wave move into a B here, 1, 2, 3, 4, 5 into the C of the X, so A, B, C into an X, and I'm actually going to try and interpret this as a 3 wave move for the meantime. It's not a clean 5 wave move, because if you go 1, 2, 3, 4, 5 into a 1, we get a really shallow retracement for that too, which is a bit dodgy. So we could say 1, 2, 3, 4, 5 A, B, 1, 2, 3, 4, 5 C, even if we wanted to. So for the like I said, this is why you don't get into, you know, obsessing over counting something so early. We haven't even taken out the previous low, low yet. Once we do that, we can abandon this and focus on getting a 5-wave count downwards. So for the meantime, this is the count that's likely to be wrong, I think. You're likely to tune in, see this tomorrow when the video's out and go, well, that didn't work. We went straight through the low low. And that's why we've got the other counts. But for as long as this wave 3 low holds here, this is a potential count which no one would expect, which is a 1-2. Yeah, we got a truncated fifth, and then we went 1, complex correction into a 2, and we come flying up. So you never know. I'm including this because no one else is. Everyone's talking triangle. So let's just say for a moment that I'm being a bit ridiculous, but you never know. You might wake up tomorrow morning, find us having bottomed here and gone flying higher, and then this was the right count all along. You know, and then I can... well, what was I going to say? I can hold my head up and say, nah, I came up with that. Or at least I thought of it. But like I said, I'm not particularly confident in it. It's just a random idea, just in case everyone's wrong. Let's move on and have a look at the final count. Now, I think I've actually come to prefer this the most. I've introduced this chart onto my Discord for my Patreon subscribers. I've shared this earlier in the week, and this one has the best symmetry now. So the idea is of an expanding flat, but unlike the expanding flat where we took the peak of the 13th of March, I've decided to count this move up here rather than as a zigzag. So 3, 3, 3, 3, 3. I've gone 5 to complete a 3, and then I've gone A, B, C. Okay, so it's a large expanding flat pattern, whereas our previous expanding flat started where our WX swing is here. We went A, B, C, where we invalidated the extensions for the C. If we move the 3 back to here, we get a completed impulse wave and a bunch of 3-wave chop going back and forth, back and forth, back and forth. So this could all be a B wave, right? And that's how I've decided to interpret it in this count, that all this 3-wave choppiness isn't an ending diag, it's just a B wave into an irregular top. You know, an irregular top because we're getting this expanding pattern. We're going down. A, B expands beyond where the A began, and the C expands beyond where the A completed, only in this case much lower than expected. Now here we get much better symmetry between the 1, 2, 3, 4 in the triangle looking for the 5, but we don't get a particularly long 3 here, counting this as 5 waves down. If we just check the length of it now, we come to the 1618 target, which is the standard extension for a wave 3, which is perfectly acceptable. Okay, we're happy with that. It's not massive, it's not past the 200, it's not huge past the 2618 or even the 3618, which is a target for a wave 3, because we're dealing with 5 waves into a C now, remember, but it's satisfactory at the 1618, and that's still a wave 3 extension target. So where we see 3 tends to be extended, 1 and 5 tend to have some parity. Either the 61.8% extension of the 1, which is a golden ratio, or the 100% extension. Now I'm pretty sure the 100% extension is going to take us beyond our invalidation point for our wave C. Let's just have a look. So we come down to the 4, which we're saying is a triangle. And we can see here, yes, the 100 does take us beyond the 2.618 C equals A, which is our cutoff for this interpretation, as the C is now going far beyond where we should expect to see it. There is no hard and fast rule in Elliott wave about the length of the C, but through practice and general acceptance, it's surmised that if you go beyond the 1618, you shouldn't really look for an extension in the C beyond the 2618, purely because it will no longer have the right look. It will look ridiculous, it would look extended, and you should consider an alternative. So we won't come to the 100 on that basis, but we do have the 61.8 here, which would just be enough to breach the low. And this could really catch people out. This could, because of all the lower targets we've got in place, a higher target like we have here could really shake things up. You know, everyone's expecting it to go lower. They're in short, and let's say you get a bounce here at the 61.8 at this golden ratio of 1 to 5. Not the most common, but I have seen it. If we get a bullish bid after completing a 3-4, you can get a very short. Especially, it's one of those rules, and it's in Elliott wave principle. If you want to go and read it, there's a passage about the completion of triangle patterns. Completions of triangle patterns can be very short, where you spend a lot of time consolidating with a bullish bid under the market. You see what I'm saying? We get a bid, we get rejected, we get a higher bid, we get rejected, we get a higher bid, we get rejected, we get a higher bid, we fail, we break, catch the actual bid, and then off we go. So you can get this really short, snappy breakdown, which doesn't come as low as everyone expects it to. So I'm not saying that's going to happen, it's just a possibility, so we should put it on the chart. 61.8% of 1 from 4. Okay, minor. Okay, so here's a target here to look at. This could just bring us down potentially in 5 waves, bounce here just below the lower low, make a lower low, then off. Then we could, so we should be looking for a reaction. If we come down here, we get a 5-3, then we should be thinking, oh, we may have bottomed here. But this could actually catch people out, because you could be coming down in what looks like a 1, 2, 3, 4, and you're thinking it's a 3-4, but it's not. It's actually at the bottom, and we're going higher. So there's a target for the flat pattern. I am actually quite liking this now. But the cutoff is 24,202. If we break through 24,202, this is bullshit, and it was wrong, and it should be discounted. So for this interpretation, they're all going lower bar the one that we looked at, which is we've already bottomed and we won't make a new low. If we make a lower low, then you've got this chart to look at, 28,692 spot 25 for a 61.8% of minor 1 from 4. We've got the cutoff 2.618 of C equals A at 24 spot 202, and then on the other chart we've got this whole confluence down here for a deep zigzag. You know, the 38.2% retracement on log scale, which is 22,061 spot 69. The 61.8% of 1 and 3 from minor 4, which is 21,248 spot 74, and the all-time high at 20,045 spot 19. We could come down and get into this box and bounce. You know, I mentioned in the previous video about how I said a long time ago we would be coming back towards the all-time highs at some point. As unbelievable as it seemed when we were up at 60,000, well, we might well be on our way to doing it now. Right then, that's all 3 counts covered. So let's pick a certain chart. We'll come out to the weekly time frame and do some basic analysis before we wrap things up. Come off of log scale for the moment. Hide our count. Okay, well, we'll come into log actually, since we're on the weekly. Let's bring up our momentum indicators. And let's bring up our exponential moving averages and our volume profile here. So we have 10 exponential moving average in yellow, 20 in blue, 60 in orange, and 250 in green. We have an RSI set to a 10 close, with the green 30 level representing oversold and the red 70 level representing overbought. We have a MACD with a 10 for the short-term moving average in blue and a 20 for the long-term moving average in orange. Weekly time frame. So we know, if you go and watch the previous video, we had a... I'm just going to bring the drawings up for a minute. Okay. Where is that gone? Oh, of course, I'm not showing them on my plonker. So here we go. We've got the pitchfork, we've got the median line was support. Okay. We also know that if we took a... I know we're about to move into basic analysis, but I just wanted to show you this. We know that if we took a fixed range for our volume profile, we got our point of control right where we'd expect it to be, which is right in the middle of this consolidating triangle, right? A point of control, maximum amount of chop by back and forth between buyers and sellers. This is point of control, so we catch a bid, we get rejected, catch a bid, get rejected, and that's where our point of control has ended up. So move that out of the way. And we've also got, when we come back to the basic technical analysis here, we've also got the 60 exponential moving average also provided support. We've got a cross of the 10 over the 20 currently on the way with the price below it. That's a bit bearish, but very completely expected given the size of this move down. Still a million miles from our point of control on the weekly time frame on the visible range here on the right hand side, and also a million miles away from our 200 exponential moving average, which is all the way back at 14,000, which I think is basically the high of the 24th of June 2019. It's in the neck of the woods. Now we could come back to the 250. I mean, I'm just saying, if all of this counts wrong, we go through all the targets and we collapse to the 250. If we finish before the 13,929 I make the previous high here, if we finish before that, then we've still got a bullish count on our hands because we haven't invalidated the way 4. So that's just how much room we've got to play with here. That would be very odd, because we seem to have a 1, 2, 3, 4, 5 thrust a little bit lower. There is one more count I will look at in a future video, which will make the bears happy, which is the idea that this is 5 waves down into an A, 50 to 60% back in a B, and then another 5 down in a C on a longer time frame. We will entertain that idea once we find the low, and we haven't found a lower low yet, but we will come back and look at that in a future video. Either way, if you get 5 waves complete down here, you should be a buyer, because the bounce, whether it's to new all-time highs or just in a B, is going to be a rip your face off rally with a lot of potential profit in it. So yeah, don't miss it. Not financial trading advice. Read the disclaimer. So above the 60, looking to break through that, I think. Find some room probably on the daily scale, which will come down and have a look. Let's just bring up our indicators. Not in oversold yet. Primary wave correction, I'm calling this, 3 into 4. So I would expect to see that round trip of overbought to oversold. Doesn't have to happen, but we had it on the primary 1, primary 2. It's often the case at larger wave degrees that we get that overbought to oversold move. Blue moving average has been accelerating away from the long moving average. It's not curving up yet or flattening out. We're still building bright red bars on the histogram on the weekly, bearish momentum still building. Once we start to see this die out, we'll be looking for a lower low, and then we'll be looking for a divergence so that we don't set another low in price. We'll come and deal with that when, as and when, and if it happens. Let's come down to the daily. So daily time frames looking much more bearish. We're below the 250 exponential moving average, below the 10, below the 20, below the 60. The 10 and the 20 are now through the 200, way through the 60 and below the 250. Yep. So anybody would interpret this on the daily time frame as a death cross. You say, yep, we've gone through the longest term moving average with all our with our 10 and our 20 and with below. For me, yeah, that's fine. You can call it a death cross, but the real death cross comes when the 60, which is the moderate to long-term moving average, also crosses over to 250 with the price below it. There's plenty of time to bottom and get our backsides back out of here in a rally, whether it's a B wave rally or a rally to new highs, long before that 60 comes down to meet us. And even then, I don't tend to read into these death cross, golden cross things too literally. Okay, so on the RSI, we had that huge bearish divergence building up for our ending diagonal or our flat, depending on how you look at it. High, lower high, lower high, lower high, lower high, break to oversold, and then rallying back up. Can't point to bullish divergence between these lows yet, as we have not set a new low. If we do somehow rally out of here and that rather weird bullish count is correct, and this is a 1-2, then we should break the previous downtrend of the triangle, continue to head higher, get above these moving averages. But if we break down as expected, we could start looking for a higher low to get some bullish divergence here. If we roll over on the MACD here, the short over the long-term moving average, come down a bit and then turn back up after making a low, we would have a low and a higher low on the MACD and a low and a higher low on the RSI with a low and a lower low in price. That would be bullish divergence, underlying bullish divergence, and that would be a very strong sign of the bottom. What we'd be looking for there would be some kind of candlestick pattern to reinforce it, with a long wick to the downside or a nice green bullish engulfing candle. Okay, so, and I think that's it really, guys. That's Bitcoin for the moment. Sorry to have waffled on so much in this one, a bit of a long one this one, but with so much to cover. Anyway, if you're new to the channel and you've liked what you've seen, please smash the like, subscribe, hit the little bell notification icon to remain informed of future video releases. Leave us a comment in the comment section below if you want to. Thank you as always to my Patreon subscribers. Your support is greatly appreciated. If you're interested in becoming a patron, you get a lot of benefits. There's a link in the description below. Go check out the tiers, see if you're interested. Now's a good time to do it at the start of the month. And also, if you're not following me on Twitter yet, there's a link to my Twitter feed in the description below also. Alright guys, thank you very much for joining me on this technical analysis of Bitcoin. I will be back with you with some more assets during the week. Take care, I'll see you soon. Bye bye.